Hello everybody, Michael Doan here. The markets just broke all-time highs. I mean, just look at all these articles right here. Essentially based on all these articles, we can see that the markets are back to levels before the pandemic crisis. Taking a look over here for the S&P 500 index, it is up 0.72% for the week and nearing all-time highs. For the Nasdaq index, it is up 2.65%, also reaching near all-time highs. And lastly, for the Dow Jones Index, there wasn't much change for this week, but again, if we look at its 52-week range, it is nearing all-time highs as well. However, given the current state of the world, this doesn't make any sense because we're still facing a lot of difficult challenges during this pandemic. Quickly, I want to take a look at some of the news affecting the overall markets this week. As of this recording, this website right here is organized by Johns Hopkins University, a well-respected and established institution of education. According to this university, as of this recording, the university has counted over 23 million total confirmed cases in the world, over 800,000 confirmed deaths in the world, and the US has reached over 5.6 million total confirmed cases, making up more than 25% of the total cases. Given the current state of affairs, it appears that this pandemic will continue to affect the entire world until a vaccine is manufactured, distributed, and herd immunity kicks in order to protect the overall population. On a daily basis, it is reported that about 50,000 daily cases emerge on average. Moving onward, many major retailers like Hertz, J.Crew, JCPenney, Sears, and Neiman Marcus have all filed for bankruptcy due to the pandemic. Swooping in after all the damage is done is the major conglomerate company Amazon. Amazon readily gobbles up all of the retail space in alliance with Simon Property Group to take over the grocery and retail space. While all this is happening, Jerome Powell and the federal government continues to pump money into the stock market, hoping that things will stay afloat. At the same time, all this money dumping into the economy has many people spooked that the increase in overall money supply will eventually cause the dollar to become useless due to inflation. If the dollar is deemed less valuable, then perhaps buying more stocks, gold, bonds, or any other form of currency may be a better idea than holding cash. All these things on top of an election year where the Democratic nominee Joe Biden and Kamala Harris insist on higher corporate tax rates and taxes on investors, while their counterparts, the Republican incumbents Donald Trump and Michael Pence, continue to downplay the severity of the situation at hand with the pandemic. With all the news this week, I'm going to focus on a few main points which are predominant factors affecting the economy and the stock market. Number one, inflation and hyperinflation. Everyone knows that the federal government continues to pump money into the stock market, and this has caused the stock market to rise overall. As a hedge, many people are putting a lot of money into commodities like gold. Warren Buffett has even invested into Barrick Gold, a company that does the mining of gold and not the actual metal itself, a very important distinction. The investment into Barrick Gold is very important because for decades now, Warren Buffett has despised investing into anything involving gold. For years, Warren Buffett has described gold as non-productive. For example, an individual can hold, play, and transform gold, but they can't do anything to make money with gold like you can with real estate, stocks, bonds, or even a business. Gold has now become a safety net against the dollar because low interest rates, high potential of inflation, and a stimulus check which may not be coming in the near future as Democrats and Republican leaders continue to bicker amongst themselves, while it's truly the American people who suffer. So if you're in need of help, I highly recommend that you contact your politicians and make sure that your voice is heard. Otherwise, let them know that you have the power to vote them out of office this coming election. Now, let's move onward to my portfolio to see how it's doing this week. Looking at the past year, my portfolio is down 6.6%, causing a loss of about $500. Looking at the past quarter, my portfolio is up 11.8%, causing a gain of about $990. Looking at the past month, my portfolio is up 3.3%, causing a gain of about $300. Looking at the past week, my portfolio is down 0.38%, causing a loss of about $35. And finally, looking at the past day, my portfolio is up 0.40%, causing a gain of about $35. My portfolio is up this week and overall performs about the same as the majority of the major indices. In addition, the dividends that I'm earning through this portfolio is still here, and in fact, if we look over time, it is steadily increasing. This earned dividends number is the reason for investing in this kind of portfolio, because even in market downturns, this number will continue to go up regardless of what happens in the market. The only reason why this number would ever stop moving up forward is if all the companies that I invest in suddenly stop paying dividends. Now, I wanted to go and take a look at my portfolio a little bit more in depth. Since we know that the market has recovered, essentially we can look at this portfolio and see which sectors have been hit the most and where it is best to invest our money. So just taking a look at this portfolio, it seems that pretty much most of the sectors that I have chosen are in the green, except for the financial service sector, the real estate sector, the utilities sector, and the energy sector. If we organize it like this, we can see that the one that's been hit the most so far has been energy, followed by real estate, followed by financial services, and then followed by utilities. Right now, it is most likely best to stay away from energy because the pandemic will continue to slow down people from traveling. And when people are not able to travel freely, then the need for oil will go down. Taking a look at the holdings in this tab right here, in the energy sector, the majority of this energy pie is comprised of companies which heavily focus in oil. And because there is a very low demand for oil right now, while several countries are continuing to increase the supply of oil, it makes sense to see that a majority of oil companies are struggling, and right now it's probably best to stay away from investing into these companies until this pandemic has been resolved and people can freely travel. Once people can freely travel, then that will probably be the best time to invest in oil companies. Furthermore, let's take a look into my real estate pie. In this real estate pie, a lot of these sectors are being hit mainly because many people aren't traveling as much and therefore they're not going out to visit certain places. For example, I have Simon Property Group, a company that focuses on mall real estate, and because many people aren't going out to malls right now, this sector has been hit pretty heavily. Likewise, in any crisis, the financial sector has also been hit pretty hard. And as we can see here, there's a lot of red, but there are some companies within the financial sectors that are beginning to bounce back. Lastly, we'll take a look at the utilities pie. Taking a look at this utilities pie right here, a lot of companies within the utility sector have also been hit pretty hard. Therefore, it may be a good time to invest in the utility sector because no matter what, most likely people will have to rely on these sectors because these are the ones that control the electricity, the water, and other basic utilities that people need. If you're ever interested in this pie or any of the subsections of my overall pie, there is a link down in the description below for you to check out, and you can take a look at how my pies have been performing over the past year. In fact, if you're also interested in investing through M1 Finance, you can go down into the description below and you can use my referral code. This referral code will give you and I $10 to invest in M1 Finance once you click that link and sign up for your first account with M1 Finance and make your first deposit. Moving onward here, on this page, we can see what my portfolio has done all on its own. For example, on the 17th, my portfolio bought some shares in these 3 companies right here, which were automatically reinvested from the dividends that were created by this portfolio. It bought some Novartis, Eli Lilly and Corporation, and Bristol Myers Squibb. In addition, it also bought some shares of Sonoco product. I bought shares in all of these companies because they were all at good prices for me to dollar cost my way into my targeted position. Furthermore, on a fundamental level, all of these companies are pretty solid for the future of their business. Most importantly, all these companies pay a dividend for holding shares, and ideally, these dividends are set to increase over time. As long as these companies pay out a dividend that increase over time so that compounding interest can take effect, then I will gladly continue to buy shares of that company at a discounted price. In addition, this week I have also earned a decent amount of dividends from various companies which I can use to reinvest into my portfolio. For example, I earned 6 cents from Hormel Foods, 26 cents from People's United Financials, 40 cents from Procter & Gamble, 26 cents from A.O. Smith Corporation, 1 cent from Stag Industrials, 23 cents from Texas Instruments, 1 cent from Abbott Labs, 6 cents from Alliant Energy, 61 cents from Hasbro's, $1.01 from Caterpillar, 39 cents from Starbucks, and 15 cents from California Water Service Group. These dividends that I earned are a result of me owning shares in each of these companies. This money is something that I did not have to put any effort into earning, besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to as passive income. Earnings which are derived from an enterprise like a rental property or a company which require little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. So this concludes the update portion of my portfolio. Thank you so much for watching this video until the end. If you like this video, then please give it a thumbs up as it will help this channel grow immensely. If you have any comments or questions, then please leave them down below in the video. I'll do my best to personally address it, either in the comment section or answer it in future videos. I greatly appreciate everyone watching my videos, and I hope to speak to you all again very soon.